Ship Happens, episode 42. Let's talk business. This is like my third time recording this today. If you hear any noise in the background, there is actually a group of students with a teacher, obviously. I want to say utilizing, but I wanted to say using, so I was like, using my shop. She teaches an ag mechanics class, and they're using my shop to do plumbing, so that's awesome. And if you hear anything in the background, that's what it is. I don't think you will, but I won't know until afterwards. So anyways, I am super happy with the response I've been getting over operating this business and trying to own one, but I also got a lot of questions about what a business is and how we can actually make a business in this country. That is a huge topic, huge topic, and it's way too much for one episode. I can easily spend multiple, 3-hour long episodes talking about it. But today I want to talk about something very basic and how to actually form a business and what types of businesses there are, because I actually was going through that just with this one before I decided to kind of unravel it and go back to the beginning. I'll tell you what I did, and after I read through this list and talk about these businesses, I can't even talk right now. After I talk about these businesses, you see I'm stuttering over my words. After I talk about these businesses, I will kind of tell you which one I am at and then where I'm going. All right. So, but first, let's get into our song today. This is a different kind of vibe. It's a little bit poppy. I believe when I was looking through this, I was looking up songs. I heard this song. It's a little bit old. It's about 2018 is when it came out. It's from an artist named CVBZ. I don't know if that's supposed to be said. So I don't know. Anyways, it's from this dude. He's from Oregon. Awesome guy, from what I've been reading, but he is leading the change in what is called chill wave. I guess that's the name of the genre. I don't know. It kind of confused me, but it sounded cool at the same time. So anyways, this song is called Two Gone. I hope you guys like it. It's a little bit of a different mix up. Here we go.
I was just driving and I heard your song on the radio. Sounds like you're doing great, and I miss you.
I knew what your mom said. You ain't with the time that you're gon' waste, don't wait. Well, I ain't gone yet, I'm in your driveway. And this is the last time you give me those eyes. I tried to hold you a little longer, but like that I told you I was over with. When we were heavy smoking in your eyes, it started snowing. We were way too gone to notice where I lost, cause we were all alone. Nights in Portland, those songs were Frank Ocean. We're too drunk and hopeless, too gone to notice. Smoking in your eyes, it started snowing. We were way too gone to notice where I lost, cause we were all alone. Nights in Portland, those songs were Frank Ocean. We're too drunk and hopeless, and too gone to notice. Naked on your futon, far gone, Novocaine was our song. And now we're too gone, naked on your futon, too far gone, Novocaine was our song. When we were heavy smoking in your eyes, it started snowing. We were way too gone to notice what I lost, cause we were all alone. Nights in Portland, those songs were Frank Ocean. We're too drunk and hopeless.
such an awesome song. I just love the vibe on that song. It's pretty sweet. Anyways, so everyone always asks me, side note, of what I do when the song plays, because I don't actually leave or there's no like cuts. I mean, all of these are filmed at one time. So when I record this podcast, it's all done from start to finish. I don't leave. I don't do anything like that. Maybe I should do a YouTube video of my recording and how it kind of looks when I record. But basically, I have a Rode deck right here. It's like an audio deck. I believe it's called the Rode. Oh my God, I don't know. I'm blanking right now. Rodecaster Pro. There it is. I had to look behind me. The Rodecaster Pro. This handles all of my audio output. I have the school's computer here with two screens, and I have my Mac, which is what I do most of my sounds and stuff on. So when you hear a sound like this or like this, it's all played off of the Rodecaster. I think I've loaded up like stupid things like, yeah, that one's good. What is this one? Yeah, oh, that's an explosion. What is this one? Oh, yeah. Yeah, so I can kind of turn them off, I guess. Maybe not that one. Okay, I don't even know. Anyways, that's how you hear. So when I have the intro and exit music, it's all loaded up, so I can just literally turn this up and press it, and you can hear it right there. There's also a swoosh you can kind of hear there. So when you go through and you hear my podcast, that's kind of what is going on right now. So I don't record these. I don't like step away and like drink, something. I'm right here. I'm just sitting there listening to the song, kind of vibing with you guys. So in case you guys want to know what it's like, that's what it's like. There's nothing crazy. Or in this case, I was playing Farmville 3. They just released Farmville 3. It does suck. It does remind me of like Heyday, I guess, is what the closest thing is. It's just weird. I don't even know how I feel about it, but that's kind of where I've been going with this. So let's jump into business. I'm going to try to keep this short, sweet, to the point, right? All these podcasts were designed to be about 30 minutes long. So let's jump real quick into business. So in this country, now understand, I do have a lot of listeners from not in the United States, from other countries. They listen in. I don't know why, but I appreciate every one of you guys. You're awesome. Anyways, in the United States, there are basically 5 types of business, right? And the 5th type is a little bit weird, and we're going to talk about that last. There is a sole proprietorship, a partnership, an S corporation, and a C corporation. Now, I learned all of this in high school economics, but I learned that some people or some schools don't teach this, and a lot of kids don't know what to do for their business or how to actually have a business. So I want to teach you guys what the legal definitions are and what your responsibilities are in each of these things. Okay, let's start with the top. Let's say you have a lawn care company, right? And you want to start mowing lawns and you want to start doing all of that jazz. Well, the first type of business and the most common type is a sole proprietorship. That means I'm just going to go out, mow lawns, take money, and that's going to be it, right? I may have some employees, I may not. It really just depends on what I'm going to do, and I'm going to have my business and run it. That is how my family started. That's how many people start. In fact, 50% of all business in the United States is sole proprietorships, right? Because it's so simple. You don't need any sort of like special paperwork to do. You don't need anything like that. The only thing you need is a social security number. Even then, you really don't need that either, right? It's crazy with a sole proprietorship and what you can do, right? Now, a sole proprietorship is paid for on taxes. We're going to talk about 2 different things today. We're going to talk about taxes and we're going to talk about legal liability, right? This is the difference in all of these corporations. These businesses and corporations too, but we'll get to that. So we're going to talk about taxes and legal ownership or legal responsibility, legal liability. That's what I wanted to talk about. So who is in trouble if something happens? Okay. So with taxes and a sole proprietorship in the United States, you have to pay a lot of taxes, but government income tax is pretty much the same. So there's federal income tax, then we have Social Security and Medicare tax. This is called FICA, right? And basically FICA is a percentage of your income up to the limit of Social Security, which is $128,000. So sole proprietorships basically are paid for in taxes on their personal tax income. So each year we have to file a tax income as an American citizen, and usually if you work for someone, you usually pay a little bit more than what's owed to you, or you have some deductions, and they give you money back. Now, for a company, they have to pay taxes, and these taxes can vary. If you have workers, you have to pay your taxes on the workers. there's payroll tax. Also, if you have any sort of gains, you have to pay taxes on those gains that you made your money on. Anyway, so when it comes down to taxes, a sole proprietorship, a very basic company, basically the proprietors or the owners of the company typically owe more federal income or federal tax than they do their income tax. So they pay more in Social Security and Medicare tax than they make, which is a problem because that means you're losing money, right? Just on taxes alone. How can you cushion this? How can you not ruin, but how can you change your profits so you don't get murdered on your income tax? Well, it's actually decently simple. You need to have expenses. For any business, expenses are important. We all want to save money. We've been taught to save money, or hopefully you have. If you haven't, save your money. It's important, right? But if you own a business, it's important to have investments or expenses that can help your business, but you can at least write off on your taxes, saying that you spent your money so you have no money to pay your taxes. If you didn't do that, then you're going to get your fair share of taxes put on. So you need to make sure you're at least either donating money, buying equipment, that sort of thing that can depreciate. And there's a lot of things you can talk about with a tax person. But just understand that a sole proprietor is the most basic form, right? But it also allows you to easily set up a business. The problem with sole proprietorship is that any profit you have is subject to that tax. And if you make a mistake, your assets are not protected. So let's say you're mowing a lawn, you're in a lawn care business, that sort of thing. You're mowing a lawn and you accidentally hit the neighbor's dog, or you hit their car. A rock comes out, hits their window, breaks the window. Let's say that you're trying to, I don't know, just run a nice business, but they sue you because you can't, you're like, I'm not paying for that. That's just natural. That's what happens. Unless you have a contract, they can sue you, and they can sue you for your profits. Let's say you don't have any money. You're like, Garibaldi, I spent all my money, man. You told me to have expenses. I spent all my money. I don't have any money for, this lawsuit. Well, what they can do is they can actually take your personal assets. They can put a lien on your house. They can garnish paychecks because your assets are not protected. This is the problem with a proprietorship, right? This is an issue with that and why they have other things. But if we look at the pros, right? Look at the pros. I know those are two really big cons, but if we look at the pros, it's very simple. There's no setup required. It's very easy for owners to understand. There's no separate business tax. You just have to pay your taxes when you pay your taxes, right? And there's no payroll if you don't have any employees. You don't have to pay yourself, right? Which actually, you don't have to pay yourself. No. You're not allowed to pay yourself with a sole proprietorship. You have two separate kind of accounts. You have your own personal account, then you have your business account, and your business kind of pays. You just withdraw money from the business and it shows up as an expense, right? Not as you're paying someone. Okay, let's move to a partnership. Partnership is pretty basic to understand. It's basically like a multi-owner version of a proprietorship. There's not hard limits on a partnership. This is really common when a dad is creating a company with his sons, or two brothers are creating a company together. This is probably the most common sort of multi-owner version of business, right? Now, I want to throw a little bit of a precaution to you guys. If you're looking to make a company with family, one, don't do it. It's not a good idea, right? Things happen, things change. You need someone that's not emotionally attached to you. So a partner could be a friend or something. Even then, I've seen it ruined, but it's important regardless to have a partnership operating agreement. It's an agreement that says who's in control, what happens, who's ownership, how can this happen if a partner wants out, all of that jazz. So what can you do if something were to happen? So you have to have that agreement. If you don't have the agreement, I guarantee the company is not going to last for a very long time. It may, but you never know. Okay, so unique to partnerships. So only partnerships have this, all right? Business income does not need to be allocated proportionally to the ownership. So this is really nice if you have a silent partner who contributed capital but doesn't expect a similar share of profit. So you can actually lay out that in the partnership agreement of what partner gets what money. If this guy's like, hey, look, this is just the capital, I'm expecting to get 1% back. You're doing all the hard work, you're doing all the physical work, I'm just providing you money and you just need to pay that back plus 1% or whatever. I'm a partner. That's how it works. So proprietorships is also bad, or not also bad, but proprietorship is also like, or not proprietorship, a partnership is also like proprietorship, and it's typically subject to more FICA taxes. So this is really why most large, high profile companies are not partnerships, because of the taxes, right? Part of the simplicity of the partnership is that the partners do not receive wages, but they do receive guaranteed payments. So a little bit different, right? A little bit different, but you can actually kind of pay yourself. It's called a guaranteed payment. Fundamentally, this structure of a partnership is very easy to understand. Talk about pros and cons real quick, because they're so similar. Pros and cons: it's easy to set up and administrate, the paperwork and stuff, very easy. It's easy for owners to understand. It's also very flexible profit allocation, so you can be like, okay, you're getting this amount, I'm getting this amount, or whatever. It's very easy to figure out who gets gets the profits. Next is basically there's no payroll to run. So if you are the only employee for the business, you don't have to run payroll. It's easy, right? Besides, no payroll if there's no other employees. Okay, so some negatives or some cons. Again, the income tax or the FICA tax is going to take most of your profits away from you. Last but certainly not least is the owner's assets. So your assets are not protected, just like a proprietorship. So the only real difference between a partnership and a proprietorship is the amount of owners. Okay, moving on to something that's a little bit more difficult to explain. So there are two types of corporations. There's an S corporation and a C corporation. Now, I'm not going to talk about C corporation yet, but an S corporation, we need to understand one thing, right? This is the most important concept to understand. So an S corporation, a partnership, and a proprietorship are called pass-through entities. So that means their taxable income, the income they make that can be taxed by the government, passes through to the personal tax returns of the owners and is taxed there. This is really good because it's very simple. That means you pay your taxes whenever you normally pay your taxes, when the business will pay its taxes, or the tax will be paid through the personal tax return, right? So S corps and partnerships still file a tax return, but no income tax is owed on the return. So if you get a tax return and you say you paid too much and they owe you a tax return, you don't have to pay tax on that because that's a tax return. Some companies, like a C corp, has to pay taxes on their tax return because that is a profit that they're showing. A little bit weird, I know, but there's benefits to a C corp that we'll talk about. So the taxable income and returns to owners, it's called a Form K-1. So the K-1 is then reported and taxed on their own personal account. So don't be a little confused. Sole proprietorships do not file a business tax return at all. That business income is directly on their Schedule C, E, or F form, right? So a partnership, and an S corp do file their own tax returns, but it is passed through to the personal return on a different form. Tax law is weird, but this is why it's so important, because you may be like, okay, why are we going into this? Why is this important? Because owners of a pass-through entity, whether it's an S corp, partnership, or proprietorship, pay their personal tax income on the profits of the company, right? But then the owners can withdraw those profits as tax-free dividends from the company, which is not true of a C corp. So that means that I can receive a tax return from my company and then take that tax return and just spend it however I want, because now it's my money. It's a dividend or it's an extra amount, right? So if a partnership, now you might be thinking, if a partnership is a pass-through entity just like an S corp, why is an F corp typically preferred? Because right now they're the same. As of right now, what I'm telling you guys, a partnership and an S corp is the same. Okay, an S corp is preferred because of federal tax. S corp owners are required to pay themselves a reasonable wage, which that wage is subject to FICA tax. But the remaining business profits are subject only to income tax, not the federal tax. So let's consider this real quick. Let's say a corporation, a business makes $1 million a year. The owner receives compensation of $100,000 and the $900,000 is business profit. I'm going to kind of go through what that kind of looks like. All right. So let's say you have an S corporation and they make $1 million a year. The owner wages, that means your wages are $100,000. Those wages are taxable. So be careful. Your wages are taxable. Okay. Same partnership. So a partnership makes $1 million. You are guaranteed owner payments on a partnership. Remember, that's the one difference between a proprietorship and a partnership. You get $100,000. So that means the taxable income is $900,000. So the FICA tax on wages, now I'm going to be using 15%, which is a decent amount of federal tax. So the 15% on the 900,000, FICA 15.3. No, I'll do 15. I'm not going to do the actual amount. So that's $15,000. All right. That's all I would owe to the government is $15,000 for my $1 million. Let's say a partnership, right? Now I have to pay $15,000 or $14,000 on my guaranteed payments because the guaranteed payments are taxable. Remember, partnership, everything's taxable. S corp, the owner wages are not taxable. So I have to pay $15,000, my partnership, on FICA tax, and then I have to pay my FICA tax on other remaining taxes. So that means my taxes go down to $42,000. All right. So that is what that means. And that's why these taxes are so important. Now, aside from that, the requirement means reasonable wages. So you have to kind of think about what a reasonable wage is. And the employees must pay and file payroll tax reports with the IRS. So this is kind of a disadvantage because you don't have to pay payroll wages to owners, but in an S corp, you kind of do. S corps do have stricter rules. So you have to be a person, a U.S. citizen or resident. You also have to have the profits and distributions always allocated according to the ownership. There's no flexibility. So if there's two people, it's 50%. There's no flexibility. Loss utilization can be limited. So that means if there's a loss, then you may not be able to deduct that loss on your personal tax return, right? It may be carried over to a future years. This is kind of an issue. And there's only one class of stock allowed. So there's voting, non-voting shares. That is it. There's really no preferred or common stock, but that's a whole nother conversation. Lastly, there can be a maximum of 100 stock owners. So an S corporation, you can have 100 owners. That's it. On a practical note, a lot of people struggle to understand S corps as a concept. It's confusing, and I totally get it. If you think about maybe an S corp is your right thing, talk to a lawyer, please. You're gonna have to anyways. You might as well talk to a lawyer. Okay, let's talk about pros and cons. The two pros I can really think about is that there are earnings beyond the wages, and they're not subject to FICA tax. You're only going to be paying about half you would of an S corp versus that. There's also that corporate legal shield. They can sue your company, but not you, so you're a little bit shielded. Some cons: it's full legal setup required. You need to go through a lawyer to have it set up. It's really difficult for owners to understand this kind of business. It's rigid profit allocation. There's really only yes or no. It's really not really flexible. Limited deductibility, and must be a person to own shares. Maximum 100 stockholders. Has to be a U.S. citizen. Must run payroll even if there's no other non-employees. Only one class of stock allowed. So it's really particular on if you need an S corp. All right, let's take a little break. Then let's move to C corps. We're back! This is this is insane. I've never actually taken a break in the middle of recording a podcast and came back a different day. So it's kind of weird for me to do that, and that's why I'm like having these cool. I wonder what this button does. Ooh. Wow, how lovely. Anyways, I've never taken a break and come back. So it's a little bit weird. I know we talked about S corps, which I know is super just amazing. And I know it's like you guys, if I didn't lose you already, got you now. We're almost done with this podcast. I needed to take a little break because people were coming in, interrupting me, and it was starting to get a little bit rough. And I was starting to get a little bit upsetty spaghetti over there. So I needed to take a little bit of break for an S corp and move, or a little bit of break after S corp. So we talked about S corps, right? Basically, the difference between S corp and proprietorship and partnership is that they are passed through, so you can just file those in your own taxes. That's it. Now we're moving into the C corps. Here we go. C corps, basically, as businesses get more complex, I was gonna say get bigger and more complex, they outgrow the S corp structure. So basically, if the number of investors exceeds the 100 shareholder limit, then they require a C corp. All big companies you can think of, DeWalt or Stanley Black & Decker, I guess, Coca-Cola, Apple, all these companies, Google, or I guess Alphabet now, are what we call C corps. Basically, privately held C corps are very rare. However, many of them exist as public companies, so I can just go and buy a part of the company if I want to, right? Now, a C corp structure are high growth startups, like messages coming through. C corp are essentially high growth startups or maybe just high growth companies that are requiring very serious funding. And this could be done in a wide variety of ways. So for example, a C corp makes all of its money based on sales of its stock and growing in that equity part, right? Their company's growing value, right? So if we were to look at these C corps, now honestly, my list is a little bit off. Let me see if I can find one. Percentage of company types. That's why I like having a computer in front of me so I can just look up stats for guys. Yes, here we go. Images. I know it's probably not the best thing. There we go. Oh, no, not what I wanted either. Okay. So if we were to group this in, and this is actually correct. So 72% of all companies are sole proprietorships. So that means they own that market. Most companies, there's a good chance that if you think of a company, it's probably a sole proprietorship. It's owned by one dude or dudette. Next is a partnership, which is 10% of all the companies. So it's owned by two dudes or two dudettes or a dude and a dudette or whatever the other pronouns are for that. Then 18% 14% are corporations. That includes S and C corps. However, if we look at revenue, I think revenue is so interesting on this statistic. So 4% of all the revenue from these companies, 4% of those of that revenue comes from proprietorships. 14% comes from partnerships, and 82% of all business revenue comes from corporations when they are only 18% of the market share. So that's pretty crazy. Anyways, a C corp is not really what is needed for most people. Most people are not going to create a C corp in their life. Very few people might get to a point where they need a very high percentage. Now, C corps are unique because it pays its own income tax. So it's like its own person. So this is different than a pass-through, which means that the owner's personal tax returns and taxes paid on the owner's personal tax. The C corp is that it's paid by the company on its own tax return. Now, the drawback of the C corp structure is that the stockholders of the C corp must pay tax on dividends they withdraw from the corporation. So essentially, the C corp must pay its tax first, then the remaining money is distributed among the owners who pay tax on. Again, this is double taxing and it's theft, in my personal opinion. So let me put it this way: a company makes money, right? And they have $50,000 extra dollars. That extra money is divided up between all the shareholders of the company. Then the shareholders pay taxes on those monies that they get. So the company, C corp, pays tax. Then the remaining money is distributed to the owners. Then they pay tax on it again. That's double taxation, right? So there's a lot of different sort of things, and an S corp definitely makes a little bit more money, but a C corp has kind of its own sort of thing. So a C corp can be really tax efficient if you think about it, right? There is ways to do that, right? You need to make sure that you have a low first layer, which is 21% corporate tax rate, so you don't withdraw dividends yet. You hold on to them, and that's kind of the way you can get around a little bit of that double taxation, right? Because if you have it growing up, theoretically, 21% tax rate is lower than the 37% you could get. So there's a lot of weird things there. There's a lot of ways you can get around it. So anyways, let's consider the pros. Now, the pros is that they have definitely a lower tax rate on corporate profits. Definitely lower on that one. They have a corporate legal shield just like an S corp, so they sue the corporation, not you. Unlimited stockholders, all entity types can be stockholders, and there's a potential for a tax-free sale of stock upon exit, depending on how you set it up. Some cons, freaking a lot of legal work to get that thing set up. You can also, there's double taxation, so you're not making as much money, and there's a limited deductibility of losses. You can't really deduct every loss like you could in another company. So, all right, let's talk about LLCs and why they are important and why people like them. LLCs are legal entities. There are so many businesses being formed as LLCs. Essentially, I can have a sole proprietorship and form my company as an LLC, which means a couple things. So the owner of an LLC must choose one of the four other structures for their tax identity purposes. So I can form an LLC, and then on my tax return, I am, an S corporation, right? An LLC is a way where you can shield your assets from a business lawsuit. So for example, let's go back to that sole proprietorship we were talking about. Let's say you were owning a lawn care business and you, mow the lady's dog, and she decides she's going to sue you and sue your company. You don't have a lot of money. Your insurance says, no, we're not going to cover you. What's going to happen? So she sues you and she wants to freeze your assets. Well, you're in an LLC. So the LLC is its own thing. It's like its own person. So she freezes the assets bought with the LLC. That's it, right? So you're protected in a business lawsuit, and that comes with a partnership and proprietorship. An S corp or C corporations, LLC is really simple to administer, so it's really easy. For example, all true corporations are required to hold annual meetings and keep records of minutes. An LLC is taxed as a corporation, is not subject to these regulations, so they don't have to do that. An LLC is pretty easy to start. In fact, I did the paperwork for an LLC, and it cost me yikes. It cost me, it's $70 in California to apply for an LLC, and then it's $130 for the service. I used a service called Zen Business, not sponsored, and they were fantastic. I couldn't be more happy with them. I decided an LLC is probably not right for me just yet, because what they don't tell you is that each year in California, you have to pay an $800 franchise tax on your LLC. Now, let's say you're making a bunch of money. The $800 is not really going to matter. It helps you with that legal umbrella, but it doesn't really matter. So when we we think about starting a business, a little review, you want to think about a couple things. One, how are your profits taxed? Two, how complex is setting up your entity? And three, what kind of liability do you want? What kind of liability protection, I should say, do you want? That's the most important question to ask yourself when setting up a business. All right. Sole proprietorships are awesome. If I were to start a business, I would go into a proprietorship or a partnership, and then as I gain a profile, I would transfer that into an LLC, which is what I am currently looking to do right now. So as things grow, as I start, profiting from different things, I will move into either a proprietorship or a partnership. Really just depends. But it's going to be an LLC. All right, guys. Hey, follow me _Chip Happens. I really appreciate every single one of you guys. Let's click this button just for funsies. Okay, I just had to press the party button for a second. All right, follow me _Chip Happens. Tweet me if you need or have any questions, need any advice. I'm here for you. All right, I appreciate every single one of you guys. I will talk to you next time. Peace. This has been an episode of the Chip Happens podcast. Thank you all for listening, and I will catch you next week with another exciting episode.